The stock market is awesome. The bulls are back in town. After the setback early in September, the market is recovering and everybody's awaiting the next highest high levels. But is this really a promise? Or is this just a recovery before the next crash? So let's have a look at the chart together and let's see what the market is telling us. Okay, let's start with the Dow Jones index in this case, not with the future. Let's start with the index and let's have a look what we had so far, because I got many questions. Is this the end of the corrective pattern here? Can we expect that the market will overshoot the last high here from early in September? And is this maybe a good entry point to go long in the market? So let's have a look. The first thing is just to keep in mind, okay, we had a setback and the setback was not really far to the downside and it was not really long. The situation here, the corrective pattern was not very long time-wise, and this is not very typical. It is possible, if we check this with our numbers, then you can see that it is possible that a corrective pattern is only, let's say, 20% or 25%. It's possible, yes, but you can see the bigger area of probability is on the right-hand side. So it is more typical that the setback is roughly 35%, 40%, something like this. This is in the mid of these areas. So we can see, okay, it's nearly the same probability so that we see deeper setbacks or lower ones. So this would be much more typical for a setback. On the other side, the same with time. So if we check equities, the stock market here, short-term rising and time, and we check the setback via time, we can see that a 20% setback in time is not very typical. Don't get this information wrong. It's not about how high these peaks are. It is how big is the area below this one. So if you just, for example, if you take a 20% time, so that the second wave is 20% as long as the first wave. So you can see it's only the area on the left-hand side from our arrow. And the chance that it is more taking more time is on the right hand side. You can see it's way more probable that it takes a little bit longer time. So in this case, this would mean that we should not expect this to be the low. It is way more probable that it takes more time and it is a little bit lower. So something like this would be way more probable. So this not necessarily means that the market needs to go there, but as we think about, shall we buy now? It might be really dangerous. So let's keep with the day chart here. Make it a little bit bigger for you so that you can easier see it. Many people are asking now, can this happen? Isn't it possible? And we had so many disappointing times here because many people are waiting. Shall I buy now? Isn't it typical, or isn't it possible that the market is overshooting now and going through this level and we can buy? So is this level here, the high from early in September, is this a good entry point? Is this a proof that this will not happen anymore? To understand this, it's really important to understand how corrective patterns are looking like. So let's have a look at the impulse on a standard, in a standard picture. You can see we have a 5-wave move up and an A, B, C move to the downside. So this is a typical corrective pattern, but this is only one, of course. So let's check what could these second waves are. And there's also some kind of a statistics on this one, and it's combined, of course, with the rules of Elliott. You can see the second wave can never be impulsive, never be a leading, and never be an ending. Zero chance for that. But we have a high probability for a zigzag and a double zigzag. Let's do it simple here. Both are quite interchangeable. They are looking very similar. They are sharp corrections. You can see the probability of this is quite high. We should not keep this in focus. It's not very typical, so let's keep it out. On the other side, we have a high probability for a flat pattern or a double sideways. And also both of these are looking quite similar, so not a big difference between flats and double sideways. We can keep in mind, we have a high probability for a sharp correction, and we also have a high probability, and if you add the numbers, you can see even a little bit a higher probability to get a sideways correction. These both are sideways correction. So what is a sharp correction look alike? So let's check the zigzags. This is a typical one, and in this case it is a down pattern. This would be a sharp correction. So let's have a look what we had so far. Okay, hey, wow, this seems to be a perfect hit. Yeah, this is a sharp correction. We have an ABC pattern. We have a strong movement into one direction. So definitely this could be a typical chart pattern for a down move here. It's a really typical thing here. So, wow, fire closed. Not really, because this low is still too fast and not low enough. So shape-wise, perfect, but time-wise and price-wise, not 100% sure. Okay, we had this one. So let's have a look, how do sideways corrective patterns look like? And these are flats. Let's stick with the flats because they are the most important sideways, and they are looking like this. They also have a sharp corrective pattern, maybe at the beginning. It's quite typical, ABC, something like this. Then they are coming up in an ABC pattern, and after that they come in a strong manner. So this is really important, because these are the really bad guys in the market, because some people are thinking, wow, we are overshooting. We have a higher high than before, and now we can go long. Many people are doing this, buying at the highest level, which is not very smart, of course, and thinking, wow, this is the proof that the bull market is on and the bear market is over. But they only get at this point, entering the market at this point, and see how the market is turning down and moving quite strongly. You can see this is an impulsive move, and 5-wave move here to the downside, which is a quite fast one typically. If you think this gonna never happen, well, let's have a look at the Dow Jones, for example. You can see we had something like this: down corrective, up corrective, sharp move to the downside. You can see, oh, this was a little bit higher than that before. If you think, wow, this is a 1 in a million chance, we have an ABC to the downside, we have an ABC to the upside, and we had a sharp move to the downside. It was overshooting. It was not very, it was quite strongly overshooting, but still in a typical way, and coming down really strong. It is not necessary that we need something like this again, hopefully no. But we should expect that the market has a good chance, after this ABC down, will come now in an ABC up, and after this coming down in a sharp way. And you can see this will not necessarily go into this area. It can be, definitely. It can go lower than even that 25,000 mark here. But at least it will take a little bit longer time. So this would perfectly fit into the typical picture. Okay, to do some number crunching, is it really possible? Yes, it is. But is it really typical that this is overshooting? That this level is going above that and not moving to the upside, but turning down? Let's have a look at this as well. And we can see that the market, we need to measure the B wave, which is the second wave. And this is the A wave. So we have a look at the statistics and see how long is the second wave compared to the first wave. So let's check this one. In this case, it is a down pattern. It's a short-term falling price. So we can see the second wave compared to the first wave. When both are with the same length, it is a 100%. So wave 2 is 100% the same length than the first wave here, wave 1. But you can see it is a higher probability that it is over 100. It can be a little bit, it can be 120, it could be even 150 or more, 40 or more, but let's say it is typical that it's near or even above the 100% level. This is not something rare, it's not something once in a million, it's something really, really typical. So this kind of pattern is something we should really have in mind. So don't get this wrong and think that overshooting this level is giving us a good indication to buy this market. No, it's not. Definitely not. It's not a proof for this. So we should not be long now. No, that's wrong. We should not mix it up. Yes, currently we are in a bull market. Let's have a look again. You can clearly see that this one is strongly coming up. And it is quite typical that this market is overshooting. So I think we have good chances that we will have an overshooting situation here. And is it not possible that this will happen? It is possible. It's not the best chance. To be honest, if I have to bet on only one of these incidents, I would prefer this one. But as a trader, I will never do this. I will never bet on only one incident. I'm always be prepared for anything what can happen. That's my job as a trader. I don't have to guess what is happening there. I don't have to have the crystal ball and say, I'm 100% sure this will be the next event and this will be the next price level. No, that's not my job. My job is be prepared whatever is coming. So currently it's a typical long situation. We can see this here on the daily chart, and we have more information if we go, for example, in an hourly chart. We have a picture perfect situation, for example, with the Nasdaq. In this case, the Nasdaq future. You can see NQ is the E-mini Nasdaq 100 future, in this case, the December contract. But if we bring up the 4-hourly chart, we can see something which is really, really typical and I really love. You can see we had some 1, 2, 3, 4, 5 wave pattern. After that, we had an ABC pattern. And if you see this one and compare this, what we are talking about all the time, if you see this one, in this case, you can see something like this. For example, it's an impulse move. 1, 2, 3, 4, 5. And then we have an ABC pattern and we expect something coming up again. And if it's possible, if it's a really bull market, it will come again and again in a 5-wave move. But even if not, this will happen. At least it will be something like a zigzag. We have 1, 2, 3, 4, 5 followed by an A, B, C. And at least one time more. 1, 2, 3, 4, 5. So we have a good indication that this situation we've seen here so far, I can bring it up for you a little bit. Yeah, it might be better. If we have something like this might come again. It can be higher even like this. It does not need necessarily to look like this. So don't expect the shape needs to be 100% the same. It can be even in a bigger scale. It could be something like this. It could take a little bit longer. That's not the point here. But we can expect roughly at minimum, this would be something typical. So we could expect some levels roughly around 12,140 if it's a 100% projection. Is it a good point to enter the market now? Well, something we suggest normally to enter the market here. This is something, unfortunately, not in these weekly videos here on YouTube. I cannot bring this up in real time, of course, but in a short, I will give you the opportunity to get informations like this on your cell phone, wherever you are, where you are. You can get my messages and get an early warning. You might go long at that point, or you might think about stopping your position at this or that event. So this is something in the future. Now you cannot get this ahead, but you can see this pattern very, very often by yourself if you have a close look at the chart. So what we expect here is that the market will continue to the upside and maybe come to a stop below this level, but it could easily overshoot, which is very, very typical. We have this in so many cases. So we should expect that the market will at least come roughly around this level, which is let's say 12,500 plus or minus. But this is not giving me a real proof that the market will continue to the upside. As I said before, we should not forget this could still happen, so that we can get this one. So how can we deal this situation? Shouldn't we be long? Yes, being long is a good one. If you are long already, perfect, don't worry about that, but trail your stop. In this case, for example, in our trading idea, we use some kind of a trailing stop. In this case, we choose the 4-hourly parabolics, for example. There are many ways you can stop your positions. It is not the task of this video to give you full detail how to do this, but I can bring it up in another video. But if you don't know how to deal this, if you have something like this, you can see as long as the market is moving strong into one direction, you can trail your stop point by point. Whenever you get a new red point, it is all 4 hours, which is quite convenient. You don't need to stick with the charts at any minute. You don't need to sit next to your computer. You can just wait for the next 4 hours and say, okay, now I get a new point. I will trail the stop wherever it is, and so I can secure a part of my profits I have on this open position. So as long as the market is proceeding to higher levels, perfect. If the market is turning around, yeah, it's a pity, of course. I prefer the market is going up here. But if not, yeah, I have secured at least parts of my profits. Or if not, maybe I have a small loss. But I had a good chance that this will happen, so probability was on my side. So if you are long now, I recommend something like this. Not necessarily this one. I think, I know that many people are thinking, yeah, which stop idea is the best? Which is always leading me the optimal output? Which is leading to the optimal output? Yeah, well, you cannot tell this in advance. It is that you have to think about, what do you wish for? A stop is always protecting your idea, and you should stop your position and you should close your position when you think, okay, this is not my idea anymore. Then you need to close your position. Don't keep a position without having an idea. But some people are thinking, yeah, but I still have a chance. Yeah, but what is your idea? Yeah, I don't have an idea about it. Yeah, then you should not have an open position. That's really crucial, I think, if you want to be a successful trader. Only trade a position with a good idea. What a good idea is, that's maybe a tough question, but something like this, what I've drawn here before, 1, 2, 3, 4, 5, A, B, C, and something like this. This is one of many, of course, but one good idea to trade the market. So as long as this idea is okay, perfect. But if this is not going to happen anymore because the market is turning around, I don't need to keep this position because maybe later it's coming up. Yeah, if it's coming up later, I have good opportunities to re-enter the market as soon as the market is coming down in a corrective pattern and overshooting the last intermediate high to enter the market long. It's roughly the same situation like here, but maybe on a smaller time frame. The good thing is, the good news, you will find these situations so many times. You find it on a smaller time frame, even 15 minutes. You can see that the market is always coming back in corrective patterns, ABC pattern, for example. Sometimes it's not so clear. Maybe you would not trade this. To be honest, I did not trade this one because this pattern was not clear enough for me. But as soon as you understand this is the strong move and this is the weak move, you have chances to re-entry the market. You can at least guess, okay, it's still a continuation of the strong direction because the down move is not really strong, but it's really important to wait for the trigger so that you're triggered on the upside. Not on the highest point, but on the high in between. That's really giving you a better opportunity to enter the market a little bit cheaper. So this is a story in another video. I just hope that this is giving you an idea how to deal with the lower time frame currently. So what shall we do if we are long, or find some good long entry now on a lower time frame, let's say 15 minutes, 1 hour chart or whatever it is, because at any time here it is possible that we see some kind of a setback and we'll have another chance to continue to the upside. So how shall we deal this? really important, I think, is don't open a position here. If you want to be long, try to find something here inside this level. It could be wherever you want on a lower time frame, like a 4-hourly chart. It even was a good opportunity to do this at that point, because you still have some movement before the market needs to decide whether to go up or down. So you have a good chance to trail the stop on the way. So if you want to use, for example, the super trend, which is another idea to trail the stop, it is not here yet. So the initial stop is still at the same position. By the way, if you want to have a clue for the initial stop, we normally set the initial stop, let's say here in this position we are using here. We use it, this was the lowest point after. I take away the parabolics, they are a little bit misleading here. So this was the pattern, 1, 2, 3, 4, 5, and this was the ABC. So this was the lowest point after the correction, and the possible entry was above this level here, so roughly here at this point. So we use the 38.6 level for the initial stop. Of course, right now, because the market moved already, we had the chance to trail the stop already a little bit. But we never placed the stop below this low. We try to get this as a bonus. We can start with a higher stop already because of probability. Do you remember the red levels we were talking about, the red areas? Roughly they are looking like this. And the chance going here and later coming up here is very low. It's only represented by this small area here. So that's the reason why we are not having our initial stop at this level, but placing our initial stop at that level. It's a 78.6 level here from Fibonacci, which is helping us to have a better risk-reward ratio. So if you have something like this, of course, we can expect that the market will reach roughly this area here. It is even clearer with the S&P 500 and the Dow Jones, as we've seen before. But when the market is coming here, don't think, this is a proof the market will skyrocketing now. Take it as a, wow, we are happy that we are here. Let's see what the market is doing. Is the market doing this? Get out. If the market is doing this, be prepared to sell short the market, because we will expect something leading into this area, like drawn before. If otherwise the market in this case is not coming down straight, but coming down in something like a shaky manner, then we have a chance to continue our buying and reopen another position, or to increase position size or whatever it is, and go on the long side, because this is indicating, wow, we are still not really strong on the sell side. We are still strong on the buy side, and we can do it again. Which one will happen? To be honest, nobody knows. We have so many exciting things currently. We are ahead of the presidential election. We have so many informations about Corona, about maybe war sceneries wherever in the world. The Iranian situation is not clear. We have the conflict between China and the US. So many input that can move the market strongly, so that nobody knows what will happen next. But we know now what we can do if this or that is happening. So I hope this is giving you a good help for your own trading decisions. If you want to see more, please subscribe to this channel. It would help me to decide how many videos I can bring. You can give comments here, you can leave a remark, whatever you are looking for, or if you like it or not. You can press, hopefully, thumbs up if you like it, and expect something more in the near future. So trade successful and stay healthy. Bye.